Topic 4 of the CAIA Level 1 curriculum introduces private equity as a major alternative asset class focused on investing in privately held companies or taking public companies private. The curriculum explains the three primary private equity strategies: venture capital, growth equity, and leveraged buyouts. Candidates learn how private equity investments align with different stages of the business lifecycle, from early-stage startups to mature firms undergoing restructuring or expansion. The topic highlights how private equity managers seek to create value through operational improvements, strategic guidance, financial restructuring, and active ownership. Institutional investors are increasingly attracted to private equity because of its potential for enhanced long-term returns and portfolio diversification. The curriculum examines the structure and organization of private equity firms and funds. Candidates study how private equity funds are typically established as limited partnerships, where general partners manage investments on behalf of limited partners such as pension funds, sovereign wealth funds, endowments, and family offices. The topic explains the economic relationships between investors and managers, including management fees, carried interest, and alignment of incentives. Candidates also analyze the role of private equity intermediaries in inefficient markets and the functions of private equity firms, including sourcing transactions, performing due diligence, monitoring portfolio companies, and executing exit strategies designed to maximize investor returns over the investment horizon. A major focus of Topic 4 is the management of institutional private equity programs and the unique cash flow characteristics of private equity investing. Candidates learn about capital commitments, capital calls, distributions, and the J-curve effect, where early negative returns arise from fees, investment costs, and unrealized gains before portfolio value matures. The curriculum explains commitment risk, reinvestment provisions, vintage year diversification, and undrawn capital commitments. Candidates also study how subscription lines of credit affect reported internal rates of return and fund liquidity management. These concepts help investors understand the timing, risks, and performance measurement challenges associated with long-term illiquid private equity investments. The relationship between limited partners and general partners represents another important aspect of the curriculum. Candidates examine the life cycle of LP-GP relationships, including fundraising, investment execution, portfolio management, and exit stages. The curriculum discusses governance mechanisms, reporting standards, fiduciary responsibilities, and alignment of interests between investors and fund managers. Candidates learn how private equity managers build trust with investors through transparency, disciplined investment processes, and consistent execution. The topic also addresses conflicts of interest, incentive structures, and risk-sharing arrangements that influence investment decision-making. Strong LP-GP relationships are presented as essential for long-term success within the private equity ecosystem. Topic 4 also emphasizes the investment process and value creation mechanisms used by private equity firms. Candidates study sourcing strategies, due diligence procedures, operational improvements, financial engineering, and exit methods such as initial public offerings, trade sales, and secondary buyouts. The curriculum explains how leverage magnifies both returns and risks in buyout transactions, while venture capital investments rely more heavily on innovation, scalability, and growth potential. Candidates also learn how private equity managers evaluate portfolio companies using valuation techniques, cash flow projections, and operational metrics. These analytical tools help investors assess whether managers possess the skill necessary to generate sustainable alpha in private markets. Overall, Topic 4 provides a comprehensive introduction to private equity investing, institutional fund structures, portfolio management, and value creation strategies. The curriculum combines qualitative analysis, financial modeling, governance considerations, and performance measurement techniques to help candidates understand the unique characteristics of private equity. Emphasis is placed on illiquidity, long investment horizons, active ownership, and alignment of incentives between investors and managers. Candidates gain insight into how private equity contributes to institutional portfolio diversification and long-term return enhancement while recognizing the operational, valuation, and governance risks associated with private market investing.